morning once again. Good afternoon, everybody. I hope you're doing well. Welcome to our page or our channel, Giant Steam International, where we discuss about any information concerning about crypto trading. We are here for crypto trading. Anything to do with crypto, that is what we talk about. We talk about analysis. We talk about different charts of candles. We talk about how you can trade using robot. How you can use exchanges, different exchanges. In future, we shall handle also Binance. We shall handle other exchanges like Huobi, how you can use them to make profits. But today, currently, we are on what we call candlestick analysis. How can you trade charts using candles, or how can you call out your trades using candles? Last time, we talked about bullish candles or bullish reversal patterns. That was bullish engulfing. We talked about pin bar, and we talked about morning star. Okay, so that is why we had our continuation today about Doji. We shall talk about Doji candles. How do you trade using Doji candles? That will be our topic today. Then next time we shall talk about how you can trade or how you can use those candles in chart. Okay, how you can use those candles in chart. All right, so let us proceed with our topic today, which is Doji. How do you trade Doji? How do you trade Doji? But before how do you trade it, we have to understand what is a Doji, and how many types of Doji that we have. Okay, how many types of Doji that we have. So first of all, what is a Doji? What is a Doji? What is a Doji? A Doji is it is a candlestick that shows indecision in the market. Why? Because it has no body, or if it has, it is very, very small. It's not recognized. We call them crosses like this because they have no body like any usual candle. There is no body like this or what. There is no body on that candle. It is just a cross like that. So that is why it is called indecision candle. It shows indecision. Why? Because when we saw how the candle is formed or how candlesticks are formed, it starts, it starts, and then it starts forming upside if it is a bullish candle by buying pressure. So when the seller comes in, the body starts diminishing. That's why you get wicks when the candle is forming, meaning that this was the higher price, and then the sellers came in and pushed. So when they push again and comes back here, it becomes the bearish candle, or it becomes red. That was what we talked about as a bearish candle. So when the reversal, or when the buyers came in again and they push price, this will remain as a wick and the body will come back. Okay, so when the time of candle gets done, the candle will stop where it is. So when Doji is forming, when Doji candle is forming, it opens here. Let's say if it is a bullish Doji, if it opens here, then when it opened, for example, let's talk about this one. When it opened, the buyers came in and pushed the price up to this end, highest price. So again, when after then, the sellers came in again and pushed the price again up to this lowest point here, like this. Then the buyers came in again and pushed the price up to here, where you see the cross. So that means that the buyers and the sellers has equal energy, or they are equal. The buyers are equal to the sellers. That is why the candle closes as a cross. There is no decision in the market. The buyers are equal to the sellers. So how do we trade it? Most time we determine the next candle and how is the Doji formed. So that is when you determine your entry point, depending on what? on the position you want to take. So that is how Doji is formed. Now, I understand that now you understand what is the Doji. It is the candle which has just a small body, or you can call it a cross, but it represents what we call indecision in the market. Okay, the Doji represents indecision in the market. All right, that is it. So we have different types of dojis. One, we have different types of dojis, and one of them is what we call a gravestone doji. Okay, it's a gravestone doji. What's a gravestone doji? It is the one with wrong wick. Okay, just a minute. The one with wrong wick, bushy wick, and then cross at the end, almost at the end. That is it. Gravestone doji. Why is it called like that? It is normally on the top of trend, and it implies that the market may reverse to downtrend. Why? Because the buyers came in here and they pushed the price. Then the sellers came in and pushed the price again back up this normal. The buyers came in just a little bit and they closed here the candle. So meaning that the sellers were too much in the market. That's why it closed like that. So it implies that the market may push down or the price may depreciate. That is what we call gravestone doji. Gravestone doji. Gravestone what? Doji. Alright, so that is it. Now, number 2, our second type of candle is we have what we call long-legged doji. What is long-legged? That is like a cross. Alright, that is like a cross. Why? Because it opened here and the buyers came in, they pushed price. Then the sellers came in, they pushed price here. The buyers came in and they pushed price in between. So the candle closed after the time of candle stop or ended or finished. That is why it is called indecision. It implies that the market is in indecision what form. The buyers are equal to the sellers. All right. So that is what long-legged doji. All right. Then our doji number 3 is what we call dragonfly. At first we talked about this gravestone. We talked about this one, gravestone doji. This implies the bearish reversal. Okay, in the market. And when you find it formed when after the end of bullish market, it means that the market is about to reverse. So we also talked about this wrong-legged doji, whereby the buyers came in, they pushed the price up. The sellers came in, they pushed to lower price. Then the buyers came in and they pushed it to middle. The time got done for the candle. So it ended in middle. That is indecision in the market. That is why we called it indecision or long-legged doji. So number 3 is dragonfly. What's a dragonfly? This is the price and it implies the buying pressure in the market. Sometimes it has you find it with a wick. Let's say, sorry, just a little bit. Sometimes you find it with a wick like this, with a wick, or sometimes you find it when it has no wick. Okay, sometimes has a wick, sometimes doesn't have any wick. Well, the wick remains this thing, where the price went low and high. So this is what we call dragonfly doji. So how was it formed? It opened here, and then the buyers came in just a little like this. Then there the sellers came in and they pushed price there up to the lowest price where the week ended. Then after that, the buyers came in and pushed price, okay, up to here, where the time got finished. So meaning that the buyers were too many in the market by the end of the what? Candle formation. Meaning that the buying pressure is very, very high. And depending on the next signal, or sorry, on the next candlestick forming, if it is a green candle, it is normally followed by a green candle, which is the confirmation candle for you to take your position for the bullish or for short. Is it for long? Yeah, yes. So if it is followed by a green candle, you can take your position and go wrong in the market. All right. So that is it. That is how dragonfly works. So if you go to chart pattern, or if you go to charts, for example, you'll find a few of them. Let us try to go to our trading view app so that you can see those three types of candlesticks. We have seen about orange, seen dragonfly, and gravestone doji today. Let us try to check them in our trading view and see. Let us try to check them in our trading view so that we can see. I'll use this coin which is called ADA. Let us see in its chart. All right. So as we said that all candles have their time frame. We have different type of time frames. So you can see there is 1 hour, there is 4 hours, there is 1 hour, 2 hours, 3 hours, 4 hours, 1 day, 1 week, 1 minute, etc. These are time frames, these ones. So they are different. All right. So they are different depending on what you want to trade. But here it is in 4 hours time frame. Okay, so next time we'll talk about candle analysis using these different indicators. We have RSI. We'll talk about those. But today let us focus on dojis. All right. So one of the dojis that we talked about, it is here. It is here, right? It is here. During our chat, we talked about the indecision or long-legged doji. So that is it. You see, it is like a cross. It is like a cross. It has just small body. The buyer came in and they pushed the price up there. Then the seller came in and pushed up to this extent. The buyers came in and pushed up this middle. Then the candle formation got done in what? Because it was in 4 hours time frame. So that is how the candlestick is formed. So what does it imply? That when it is formed toward the end of the bearish market, it means that there is indecision in the market. The buyers are equal to the sellers. So if it is followed by the red candle, which can act as confirmation candle, this one, for example, if it is followed by the red candle, you saw the market went bearish, right? So when it is formed like that, it is followed by that candle, it is the bearish. But still, it implies that soon there may be a reversal pattern. Those doji candles sometimes act as reversal patterns. So sometime here towards where we are going, you see the candle starting forming. So it might be a reversal. What candle? When the green candle is formed, you can take your position and then go wrong. You buy so that you can take your percentage and you're good to go. So that is it. Again, when we can check, that is a long-legged doji. I'm trying to check if you can get also another type of doji, so that we can see as well. Yeah, it is here also. Another language doji, it is here. We have also another one here. Very good example here. Okay, just a long wick, but a cross in the middle. Okay, there are many in the market. So when it is followed by a red candle, sometimes it is a bullish, but it is a bearish movement that is coming, but in the future it implies that the market may do a reversal. All right, yeah. So for example, we have this one here. We have this one here. This one, you see the red candle, then the Doji came in. It is followed by what? By a green candle. That can be a confirmation for bullish run. And there you see where the market tried to be bullish a little bit here, from here up to here. So just a little a percentage, you're good to go. So you can use this candlestick analysis to make money even when the market it is going down. So I want to try and check if you can get some in the bullish trends. You know, we have a bearish market these days, but let us see. All right, I can use this example. So we have a doji here. All right, so see, in the forming, this was a downtrend. So it formed here at the end, toward the end of what? Downtrend. And it was backed by the green candle. All right, and then after, you see, the market went bullish up to this extent. Okay, I don't know if you will get some points here. So that is how you can trade. When you find it at the end of downtrend and followed by a green candle, you're good to take your position and take a good percentage or some good percentage. Then you're good to go. There's another chance here. If you find a doji toward the end of downtrend, for example, here the same thing happened and market went up to this extent. Right, so we also have another. There are many, but I think I'll stop there. So we also have another type of candlestick, which is a gravestone doji. I'm trying to find it in my chart here, but it is I normally see it in 1 hour. Let me try to check so that we can see 1 hour time frame. 1 hour. Is it coming? Yeah. Alright, let me try to check 1 hour time frame. 1 hour time frame. And you see how do we trade this? Oh, it was up here. Okay, let's try to see if there is any. Try to minimize my screen and check if we can have some of them. Yeah, we need we have seen a long rigid doji, so we need I'm looking for a candlestick that we can see as gravestone, and then we see how you can trade it. I don't know if I can find it here. I'm trying my best. Gravestone Doji. It is rarely seen, and whenever you see it with a very, very good confirmation, then you're good to take your position and then go long or short depending on your analysis. But they are very, very good candlestick to determine when you're doing what, when you're trading using candlestick what, candlestick analysis. Oh, I don't know, I'm not finding it. I think I should change my chart. Okay, let me try to get another. Let me get my 3 hours time frame, see if I can get something different. Get something different. All right, let me try to get another coin. Maybe it can give us a different stuff. Let's see this iron USDT, right? Iron USDT, I'm trying to get it so that we can see. Yeah, the long range Doji is the one which is too much in the chart, and we are looking for a gravestone Doji or another kind of what, of Doji, which implies the reversal signal, right? I think I will get it in my other charts or my other lesson. We shall start with it and we see how you can trade it or live in the charts. But that is how you can trade the Doji. Normally it's very, very important when you find it toward the end of reversal trend or reverse toward the end of the trend. Okay, so if it is gravestone, it is okay to find it when it is on top or end of the bullish trend. Then when it is the other Doji, the long range one, you need to find it when it is in the middle of what, toward the end of bearish trend. That is when it implies the reversal pattern or the reversal market in trading. So that is it, how you can determine. This is a trading view. If you want to do candlestick analysis, you can always come have your trading view downloaded, and you can always check your analysis before you take your position in any trading. All right, so that is how you can use Doji. Was our topics today. We have dragonfly, we have dragonfly, we have long range Doji, and then we have gravestone. We said this implies, this implies a bearish market. If you find it at the end of what, of the bullish movement, it implies that the price may depreciate. Then we also have wrong rate. This implies indecision in the market because the buyers are equal to the sellers. Then we also have this dragonfly. We normally appreciate it or we use it when we find it towards the end of downtrend. right? The end of downtrend. And then when you find it, it implies that the market may reverse. It is rarely seen, but when you see it, it implies the very, very good bullish run in the market, which can give you good percentage in the market. So that is how you can do candlestick what analysis, especially those people who love to trade using candlesticks. All right, so I think this has been very helpful to you. If you like to learn about all these stuffs, just make sure that you comment, you like our page, follow, and put on notification bell so that you can have this information shared to you or notified to you whenever it is shared. So allow me to get it stop here, and we shall be able to catch up next time with any other good stuffs concerning about trading and how you can be able to benefit in the crypto space, and using what technical analysis or candlesticks and other. You can also trade using a robot so that you can be able to tap into the market, automate it, buy fair margin calls when you're off or when you're away or when you're even not online. The robot can trade for you and you're good to go. Thank you so much. Don't forget to follow up so that we can be able to answer your questions. In case you have any or you have any suggestion, feel free to tap into comment section and then drop your question. You'll be able to get back to you. Thank you so much. My name is Frank, and bye for now. I love you all.